Hi, everyone. So in this video, I want to do something pretty cool. I want to go over what your money can do for $500 a month can do for you if you're a 30-year-old and get an IUL. Now, before I go into everything, you need to know that not every strategy and structure is the same. Not every agent is the same. So it's important that you go to someone who really knows what they're doing and knows how to structure this. Again, this is an example I want to go over. That's $500 a month that you're going to put into the Index Universal Life Insurance Policy. And the reason that you want to do that is because your Index Universal Life Insurance Policy has a cash accumulation option, right? So you're not only buying life insurance, you're also utilizing your policy as a sort of savings, okay? But it's even better than any kind of savings out there. All right, so after your initial premium of $500, your death benefit is $555,576. You put in $500, first time payment, die tomorrow. That is what your estate, that is what your family gets. So you're taking care of them immediately. Now, say you don't die, but something happens to you. Also, immediately are your living benefits that you're able to tap into your death benefit to pay. That is the immediate coverage and very first benefit that I want to talk about. Now, remember, IULs are treated, or insurance is treated special by the IRS. And so when you're taking money out of your policy, that is income tax free. Now, again, this is a 30-year-old female who's contributing just $500 a month for 25 years. Okay. And that, my friends, is $150,000 after all the payments are made. That's how much has been put into the life insurance policy. $150,000. But what I'd like to show you here is this is year 8, year 25, at age 54. That $150,000 has grown where? Yes, that's right. It's at $301,130. Now, this is just an illustration, right? And I'm going to show you here, it's illustrating for returns at a very conservative 6.45%. I can tell you with this carrier here, and yes, of course, there are caps, right? You've got to have a little bit of give and take. But again, we're not replacing big, major, whatever, trying to grow type investments, day trading, anything like that. We are essentially taking place of other retirement plans and savings vehicles. Thus, the cap in for this particular carrier, everybody, is actually 14%. The reason why we illustrate at these conservative numbers is, one, because of the law, right? And two, because we don't want to set you up for failure. We want to give you a conservative look at what your funds are going to look like. And in fact, the reality is it'll probably be better than it's illustrating. So $500 a month, that's what you're putting away. You're probably easily doing that inside of some sort of a retirement plan already. But remember, with those retirement plans, your money is growing tax deferred, just like it is inside of the IUL. But the thing is, when it comes out, right? Well, first of all, there's a certain time that it has to come out. But when it comes out, it is taxed. Inside of an IUL, when you're withdrawing it as a loan, you get that money income tax free. So I also want to point out a second really cool thing. At the age of 54, and that's a pretty young age, your cash accumulation balance from your 150K total is now $301,130, $301,000. Your death benefit at that time, ladies and gentlemen, is up to $827,941. That's right. So you're putting away this money, $150,000, $500 a month. That money is going conservatively, will likely at a 6.45% rate, will be at over $300,000. So 150,000, you've now turned that is more than 300K. But on top of that, you have over $800,000 of death benefit. If anything happens to you, That's how much your family is going to get. That is a huge deal. So I also want to point out here, in year 26, when you're 55 years old, just look at this. Your cash accumulation went in 1 year from 301, 130 to $320,000, 849 on these conservative numbers. A couple of other things I want to talk about are your cash accumulation and death benefit when you start reaching the ages of 79, 80 years old. Now, mind you, remember, you stopped making any payments at age 54. So you're done. And your cash is accumulating and it's growing with the market index. Okay. It's growing with the market index, tax deferred. And then when the market goes negative, when there's market volatility, all of your compounded gains and your principal are locked down and you lose nothing. So think about this. Market is doing well, you gain with it. Keep in mind you have a cap of 14%, but check it out. Again, illustrating at only 6.45%, you are doing very good. So all of this compounded growth over time and the protection of no losses with market volatility means that at 79 years old, and again, at a conservative 6.45 rate of growth, all right, your cash accumulation from your $150,000, from your $500 a month, only up until you're 54 years old. Pretty sure that's easy to do, right? Most Americans can do that. Look to see what that grows. Ta-da! Yes, ladies and gentlemen, you have over $1.5 million. You have turned $150,000, saving only $500 a month, to $1.5 million now. And your death benefit is a little bit more than that at $1.6 million. Now, let's say you don't ever need to tap into this or whatever for whatever reason. And I'm sharing this with you because I'd like you to just see how this can even grow more tremendously, right? Let's say you don't ever tap into it for any living benefits or anything like that. And then you're reaching the age 93, 94 years old. Well, your cash accumulation at that point is over $4 million at 94 years old. That's what saving $500 a month. $500 a month. That's it. Think about what you're contributing to your 401k. Okay. Your 401k is not necessarily, it is not going to do what an IUL can do for you. Make sure that you're leveraging and maximizing the potential of your dollars. In this policy, let's go over the accelerated benefit rider amounts at age 65. So remember, 30-year-old woman, she's starting to contribute to this $500 a month up until she's 54. And then at age 65, let's say she does need to tap into some of those living benefits. All right, how much are those? What does she have available? Well, terminal illness benefit is a lump sum payment of $730,798. Chronic illness benefit, if she becomes chronically ill, she's going to get $13,758 a month. Okay. Critical illness and critical injury. That benefit is up to $706,063, one lump sum. Then, God forbid, Alzheimer's disease. She's diagnosed with Alzheimer's. That's a $692,089 lump sum. Now, I am aware of people who have faced these medical issues in older age, and I can say to you, these funds will make all of the difference in the world. And all of that is set up. You're not getting more jobs, doing anything. You don't have to do anything. You have the tools already. You're already earning what you need to earn, right? To be able to have $4 million to leave to your family or cash that out at, age 94 have almost $700,000 if, God forbid, you are diagnosed with Alzheimer's disease and need a lot of care, you will be covered. And you're doing nothing different. You're just placing those funds in a different vehicle.